Welcome back to the Money Compendium. In our last video, the best passive income source for beginners, we talked about how high-yield savings accounts are one of the easiest and safest ways to start earning passive income. Today, we're digging deeper. We'll break down what passive income really means, what high-yield savings accounts are, the different types of savings, how interest works, and which accounts are paying the best rates in 2025. By the end of this video, you'll know exactly how to put your money to work without complicating your finances. Let's start with the basics. Passive income is money you earn with little to no ongoing effort. You might put in some work up front, like writing a book, buying a rental property, or building an online business. But once that system is set up, the money continues flowing in. That's very different from active income, where you have to work for every dollar. A 9-to-5 job or freelance gig means if you stop working, the money stops coming. Passive income flips that on its head, because your money is working for you instead of the other way around. High-yield savings accounts are one of the simplest forms of passive income because there's no hustle involved. You're not monitoring investments, day trading stocks, or chasing side gigs. You're simply putting your money in a smarter place and letting it earn interest automatically. So what exactly is a high-yield savings account? A high-yield savings account, often called a HYSA, is a savings account that pays a much higher interest rate, known as annual percentage yield or APY, than a traditional bank account. Right now, the national average savings interest rate is still under 1%. That means if you have $10,000 sitting in a regular savings account, you're earning just a few dollars a year. In a high-yield savings account, that same money could be earning 4, 5, or even 5.5% interest in 2025. That's dozens of times more growth without taking on any extra risk. But here's why it's so important to be careful how you save. Inflation. Inflation is the gradual rise in prices over time, and in the last few years, we've seen it stay stubbornly high. Even at just 3% inflation per year, the $10,000 you have today will only have the buying power of about $7,500 in a decade, if it just sits there. If your money is in a low-interest savings account, or worse, sitting as cash under your mattress, inflation is eating away at it every single day. In that scenario, your dollars are literally losing value while you sleep. That's why even a modest high-yield savings account is a game-changer. By earning 4 to 5% APY, you're not only keeping pace with inflation, you're protecting your purchasing power and growing your wealth without complicated investing strategies. Simply put, putting your cash in a regular savings account at 0.5% APY is like letting it rot in slow motion. Parking it in a HYSA makes your money an asset that works for you instead of against you. Now let's talk about the different types of savings accounts because understanding your options will help you pick the best place to store your money. Traditional or online savings accounts are the standard choice. They're linked to your checking account, so you can move money instantly or within a day. They're great for emergency funds or short-term goals, but the interest rates are terrible and won't help you beat inflation. High-yield savings accounts, on the other hand, are often offered by online banks or credit unions. These banks pay higher rates because they don't have the overhead of maintaining hundreds of physical branches. The only trade-off is that moving money between accounts can take a day or two, but the extra interest almost always makes it worth the wait. Certificates of deposit, or CDs, are another tool. They let you lock your money away for a set term, like 6 months, 1 year, or 5 years. Because you're giving up liquidity, banks reward you with a guaranteed rate, but withdrawing early usually means paying a penalty. And then there are money market accounts. These accounts sometimes pay competitive interest and come with check writing privileges or debit cards. But they often require a higher balance to earn the best rates, so they're better suited for people with more cash to park. Think of it like this. If you want quick access to your money, go with a HYSA. If you're okay with parking your cash longer to squeeze out more interest, CDs are worth exploring. Now let's talk about interest, because this is where your savings really grow. Simple interest is straightforward. You earn interest only on your original deposit. For example, if you put $10,000 into a simple interest account at 5%, You'll earn $500 every year, but that's it. Compound interest, though, is where the magic happens. With compound interest, you're not just earning on your initial deposit. You're earning on your interest too. Most HYSAs compound daily and pay out monthly, creating a snowball effect that accelerates your savings growth over time. Even a small difference in APY can have a massive impact if you let your money sit and grow. Before we dive into the best high-yield savings accounts of 2025, do me a quick favor. If you're finding this breakdown helpful, hit that like button and subscribe to the Money Compendium. Supporting the channel helps us keep making videos that make your financial life simpler and more rewarding. All right, let's break down the top high-yield savings accounts for 2025. Rates are always subject to change, so make sure you double-check before signing up. But as of August 2025, here are the leaders you should know about. Digital Federal Credit Union is offering an impressive 5.5% APY on your first $1,000. That's a fantastic rate for anyone building a starter emergency fund or just dipping their toes into saving, though the rate drops once your balance goes beyond that threshold. So APY of 5.5% on up to $1,000, not a bad start. Next up, Varo Bank is making waves by offering 5% APY on balances up to $5,000. There are some basic requirements, things like setting up a direct deposit or using their debit card each month, but if you're already planning to bank there regularly, it's an easy win. AdelFi is also coming in strong, offering new members 5% APY during their introductory period. Keep in mind that this rate is subject to adjustment after that initial window, but it's perfect for people looking to maximize their savings early on. Just make sure to check out how the rate drops work. For instance, how long before they drop, how much they drop, and how many times rate drops are likely to occur. This will help you make an informed decision on whether or not to invest with them. Then there's Fitness Bank, sitting at around 4.85% APY, a solid choice for anyone wanting stability and reliability. And if you want a well-rounded digital bank with no surprises, Axos Bank holds steady at about 4.5% APY, with no monthly fees, an intuitive app, and a reputation for excellent online banking tools. Other strong contenders worth considering include SoFi, Newtek Bank, Zinlo Bank, Capital One 360, and Marcus by Goldman Sachs. These banks are all offering rates between 3.5% and 4.5% APY, and they stand out for their ease of use, no maintenance fees, and seamless digital experiences. So, why go through the trouble of opening a high-yield savings account? Because the benefits are unbeatable for such a low-risk move. Your money is FDIC or NCUA-insured up to $250,000 per depositor, per bank, meaning your savings are safe even if your bank fails. You also avoid the ups and downs of the stock market while earning rates far above what traditional banks are offering, many of which still pay less than 1% APY. Plus, you can manage everything completely online, making this one of the most hassle-free ways to grow your money. Of course, there are a few things to watch out for. Rates can fluctuate, unlike certificates of deposit, CDs, so that amazing rate you see today might not last forever. Transfers between banks might take a day or two to settle, and some institutions have minimum deposit requirements or spending rules to unlock their highest advertised rates. That's why the best account really depends on your personal needs. If you're building an emergency fund, you'll want a bank with instant access and no strings attached. If you're looking for maximum interest, you may need to meet certain conditions each month, but the extra earnings can be worth it. Here's the big takeaway. Passive income doesn't have to be complicated. A high-yield savings account isn't going to make you rich overnight, but it's a safe, simple, and guaranteed way to ensure your money is always working harder for you, even while you sleep. If you're just starting your wealth-building journey, this is the perfect first step. Move your emergency fund or short-term savings into a high-yield account, monitor your rates a few times a year, and let your balance grow without lifting a finger. Thanks for watching, and thanks for being part of the Money Compendium community. Small, smart moves like this one are the foundation of real financial freedom. Start here and you'll be ready for the next big step in your money journey.